Good evening, everyone. Welcome to Let's Trade Live, 5th of June. On behalf of Fullerton Markets, I warmly welcome everyone. I'm Wayne, Head of Research and Education. So as usual, the webinar will be divided into 3 segments. We'll look at the key event or events that has happened in the past 1 week. Then we'll move on to the calendar for this week. And finally, we'll move on to the charts. So feel free to keep your questions coming. I will take the questions along the way. For last week, the key event that's happened, which is the main focus of the market, is basically the non-farm payroll. Market is expecting to get some clue as to what to expect when to expect Fed to raise their interest rate the second time in 2017. So the actual non-farm payroll actually shown a slowing in hiring. But if you look at the chart below that I have extracted from tradingeconomics.com, it is not as gloomy as the data has shown. The blue line shows the non-farm employment numbers, which is quite consistent. As you can see, that the numbers showing steady growth in the jobs, and whereas the black dotted line is showing the unemployment rate, which is in a downtrend. So if the number of jobs added is in a constant pace where the unemployment rate is going down, it is showing a very nice trend, meaning the jobs market is in a healthy state. So that is of course the immediate reaction from the market could be a sell-off in the dollar, but as market cool off and start to analyze the data in depth, they would have realized that the jobs is actually in a very healthy state. Thereby it is quite likely that Fed will increase their interest rate in 10 days time this month. So very quickly, for those of you who have read our research this week, this is one thing I just to repeat: the 5 reasons why we think the Fed will hike again. So of course the first reason is Fed is not a day trader, they are policy makers. So what does this point mean? It means that they don't just react to one single data. They look at the overall trend to decide their policy. Otherwise, they will be like flipping back and forth in their decisions making, because there are so many economic data released every day and every week. So this is one key thing. As long as the job market is in a healthy growth, the trend, as you can see, is quite healthy. Unemployment rate is going down, and the number of jobs added to the market is in a constant pace. The second reason why we think Fed will hike again is because this is a key thing that some of the trader may have overlooked. Commodity prices offer a life to US inflation. Most of the commodities that we see is priced against US dollar. So we have seen the US dollar weakening for reasons that because it is disappointing, the market is disappointed in terms of how many rate hike to expect in 2017. It could, if you look at it from the other point of view, it could be the market is setting too high expectation on the dollar or the Fed itself to increase a few rounds this year. But having said that, when market is disappointed, we see the dollar weakness recently. So a lot of commodity prices are priced against US dollar. If US dollar weaken, we could possibly see the commodity prices going up. And when commodity prices goes up, there's a chance that it could push the inflation higher as well. So when inflation, when there's a trend to see that the inflation is going higher, the next potential move by central bank will be to increase interest rates. And here comes the third reason, the fear gauge VIX. VIX is basically a volatility index created by Chicago Board of Options Exchange. So the fear gauge VIX is at historical low since 1993. So fear gauge at historical low, meaning it is showing the market is more risk averse. The market is more likely, or the market is more optimistic. So as you can see, the stock market going up and things like that. So when market is in a state whereby they are more optimistic, it gives the Fed supporting reason to raise interest rate sooner than later. Fourth reason is Fed wouldn't ignore the upbeat ADP non-farm payroll. Before the actual non-farm payroll, it is the ADP non-farm payroll which measures the private sector. So the actual data came in 200 over 1,000, which outperformed the market expectation of about 180,000. So Fed won't just ignore this number. It is showing the private sector is booming. And finally, the last reason is what we see China taking action. They have intervened in the market to strengthen the Chinese yuan against the US dollar, which we have mentioned in last webinar. So this is seen as a preemptive move to prepare for potential Fed rate hike, because when Fed increase interest rate, there's a good chance that the US dollar will strengthen against the Chinese yuan. So the China take a preemptive measure to strengthen the Chinese yuan first, so that there's more room for it to weaken against the US in the event Fed increase interest rate. So this is the 5 reasons why we think the Fed will increase interest rate in 10 days time. So next we move on to the calendar for this week. This is Tuesday. Tuesday we are having a central bank to announce their interest rate, which is the Reserve Bank of Australia. The time is 12:30 p.m. GMT plus 8. So GMT plus 8 corresponds to China, Hong Kong, Malaysia, Singapore time. So market is expecting them to maintain their interest rate 1.5%. We are also expecting them to maintain their interest rate, not to change any interest rate at this moment. But you never know, the central bank may surprise the market. So this is our suggestion to put a pending short Aussie dollar in the event RBA surprise the market by cutting interest rate. So if they make such a surprise decision, there's a good chance that there's a major sell-off in the Aussie dollar to take your pending short position for a good ride. So this is our suggestion. And then towards later the night, around 10 p.m. Usually it is released between 10 p.m. to 10:30 p.m. Of course, the actual timing is not fixed. This is the global dairy trading price index, which measure the dairy auction prices. So previous number showed an increase in 3.2% in the prices. So if dairy prices goes up, it will benefit the Kiwi dollar because New Zealand exports a lot of dairy products and it has a big impact on the economy. So this is our suggestion to put a pending long on Kiwi dollar if the actual number is greater than 3.5%. So the last 3 or 4 release of this GDT price index has shown healthy growth between around 3% plus minus. So if this upcoming data really shown even a bigger jump in dairy prices, we could expect a significant move in the Kiwi. So that's a reason for our suggestion. Next, we move on to Thursday, 8th of June. Okay, 8th of June, there's 2 major events. Of course, the biggest one is basically the UK parliamentary election. So do watch out for this day if you are trading any sterling pairs. So there may be volatility during that day when the time of releasing the election result is out. Of course, when they are counting the votes, they may release they may update the market on the vote counting at the point in time as it goes. So whenever it shows that the Theresa May is having a big lead, of course we may see the sterling strengthening. If the Theresa May is not having much of a buffer or advantage, then we may see the sterling weakening. So this could be happening throughout the day until the actual election result is being announced. The final election result is being announced. So when it is announced, as long as Theresa May had a majority win, we could possibly see a rally in the sterling. Then towards the night at 7:45 p.m., it is the ECB interest rate decision. Market is not expecting them to change their policy or their interest rate this time round. But again, in the event that Mario Draghi chose to make a surprise move, then this is our suggestion. If they decide to increase the interest rate, okay, never mind the possibility of it happening, but if it does happen, this is our suggestion. Put a pending long on euro dollar. If either they increase the deposit rate, which is at negative 0.4% now, or they increase their interest rate, which is at 0% now. Of course, if they maintain their interest rate, then it doesn't fulfill our criteria for this pending long trade. You should remove it. And of course, another 45 minutes, that is when ECB will have their policy statement and press conference. So this is where Mario Draghi will give market some insights as to what to expect in the future and what is their plan. Whether are they looking at tightening, what's their forecast of the economy and things like that. So their tone and their expectation will definitely move the market as well. So in this press conference, we are expecting ECB and Mario Draghi to be less dovish as compared to previous rounds. So when they does that, possibly the euro may rally against the dollar during the press conference. Of course, this part for a trader to take any position during the statement and press conference, it requires a lot of skill and knowledge, and also to listen in to the live statement online, and then you have to decipher every single sentence and react immediately. So this is not a very basic trading. It is more for higher advanced level of trading. But if you don't intend to trade during the press conference, I would also strongly encourage everyone to listen in to the live telecast of the statement, and at the same time look at how the price react to every word or every sentence that Mario Draghi has to say. So this is about the calendar for this week. Okay, Thursday would be a big day for all the traders out there. Okay, so before we move on to the chart, this is our popular promotion. In case you have not taken advantage of it, do check it out at fullertonmarkets.com/promotions. You can get up to USD 10,000 for free. The next announcement before we move on to the chart, next week I'm on a family trip. Yes. So our chief strategist Jimmy will be taking next week's webinar. So we have gotten very good feedback about Jimmy's webinar and his so-called insights to the market. So next week we'll be taking the webinar. So I look forward to, he's looking forward to having all of you for his webinar as well. So without further ado, this is where we will go to the charts to look for trading opportunities. So feel free to type in the currency pairs, symbols, and the time frame. So while we are doing so, we will review the charts that we have looked at last week. So we have looked at 5 charts. Okay, Euro dollar and Euro CAD, they are considered correlated because both are paired against the Euro dollar. So this is Euro dollar. The vertical line shows the time of last week's webinar. So I gave long trade, so-called entry for this. That is how I would enter. Of course, market has volatility, and this is one of the classic example where I got stopped out even though I'm correct in my direction. So I call for a long in Euro dollar, and it hit my stop loss. So I placed my stop loss around 1.1145. So you have seen the price pierce through it. Another 30 over pips. So regardless of where I put my stop loss, around that price would have gotten hit and exited with a loss. And then market just moved in my direction after that. So some of you may be asking also, Wayne, do you feel sad about this trade when such things happen to you? My answer is yes. Immediately I'll say when I see it hit my stop loss, and then another day later we see, or another 1 day or 2 days later, I see the price move in the direction that I anticipated. Of course, if I tell you I'm emotionless, that is kidding myself and you as well. So of course I will feel sad just like most people. But having traded for so many years, it becomes, how do I say, I know how I would feel already. So it doesn't matter anymore. So it is, how should I put it? It is like, I already know I will feel sad about it. Yeah. So life goes on. This is only one trade out of the thousands that have taken in years. And it is just also one losing trade of maybe another few thousands that are going to take in the future as well. So it doesn't make much of a difference just hitting a stop loss. So that's the Euro dollar chart that we have looked at, and the next one is basically Euro CAD. So you'll notice Euro CAD has similar movement. So it went down first to hit my stop loss 1.5 before heading up to the in the direction. So as I have mentioned in last webinar, if any of you wanted to take positions in 2 of this currency, Euro dollar and Euro CAD, do manage your risk because there's a high chance of both hitting profit at the same time or both hitting stop loss at the same time. So for me, my practice or my habits when it comes to correlated pairs, when I take positions in correlated pairs, I usually divide the risk. So I will divide my risk into 2 so that even if I hit 2 stop losses, it is equivalent to my normal single stop loss trade. So it doesn't cost me a big chunk of my account. So that's what I usually do when I enter correlated pairs. And the next 2 charts that we have looked at are also 2 correlated pair, which is the pound dollar and the pound yen. Pound dollar, I call for a short, and then the vertical line is the time of the webinar. So very nicely, I think in within 4 hours after, or within 6 hours after my webinar, it gives an entry. It closed at right at my entry price 1.2 835. It fulfilled my criteria for short. And then my first milestone 1.2795, this is where when price hit the area, that is when I'll take partial profit and shift my stop loss for the rest of the positions to protect them. So for this one, it has hit the first milestone and retraced back up to hit my trailing stop. And then after that is history, market volatility in the causing the sterling to whipsaw quite a fair bit. And the pound yen has similar movement, however it doesn't fulfill my criteria. The vertical line, so I was anticipating price to head higher towards 143.60. If it does turn down, then I'll take a short. So for this pound yen pair, it did not went all the way up to 143.60. Rather, it forms similar pattern as the pound dollar. After the webinar, it forms a bearish engulfing candlestick pattern, and then it pushes the price downwards. So for pound yen, it did not fulfill my criteria for an entry. Finally, for gold, it has resulted in some whipsaw as well throughout the week. So quite a volatile market over here. So for gold, I marked the so-called range during the webinar, and I mentioned that if price broke above to maybe 1270, close above, that would be my criteria to go long. So unfortunately, the market gave me a false breakout, so it hit my criteria to go long, and then price reversed back into the range to go opposite direction. Of course, in the webinar, I also highlight there's another potential short if it does fulfill this criteria to go short. For me, I do not prefer the short because fundamentally, I feel that at the point in time doesn't really benefit. So, or rather, at that point in time, I do not believe there is a good reason for US dollar to strengthen. So it went down for a while before it retraced back up. So you see the market volatility over here. It went down and then went back up again, and it went even higher. So from a tight range, as you can see over here, it went to a bigger range over here. So there was an increase in market volatility before prices going up. So this is another example when I'm sort of right in the direction but got hit by market volatility. So last week was considered a volatile week. So that's so much for the charts that we have gone through last week. Let's look at the requests for this week. Okay, I have pound yen and gold and euro. Oh, interesting. We have a few requests that are coming in for pound dollar and gold as well. Okay, by popular demand, let me just go to pound dollar and pound yen as well, and dollar yen. Okay, let's look at pound dollar, pound yen, and dollar yen. Pound dollar, pound yen, and dollar yen. Okay, there's a mixture of requests. Some are H1, some are H4, and we have even daily as well. So to avoid confusion, usually I will just take one time frame So for these 3 pairs, what I'll do, I'll stick to one time frame. If you allow me a quick look at the pair. So what I'm doing now, I'm basically doing a quick scan between the H1 and H4 in all 3 pairs to try to take a look at the pattern and see which is the pattern that I feel nicer, in my opinion, to trade. Okay, why do I group these 3 pairs together? In the currency market, you can always find 3 pairs that are sort of related to each other. So in this example, it is pound dollar, dollar yen, and pound yen. So the 3 pairs are made up of 3 currencies, basically the pound, the US dollar, and the Japanese yen. So when you have 3 pairs, 3 currency pairs that are consist of 3 currency pairs, 3 currencies, that means they are related. So how is it related in this case? Pound dollar. So if you put a pound versus dollar, and you put dollar versus Japanese yen, and pound yen. Okay. So how is it related, these 3 pairs? Some of you may have heard me mention this before. It is very simple. So basically, pound dollar multiplied by pound dollar multiplied by dollar yen, that will gives you pound yen. So that's basically how the currencies market is being related. These 3 price codes are related in such a formula. Of course, because the price are moving so fast in split seconds, it may not be exact. If you take the price of pound dollar now, multiply with pound dollar yen now, it may not give you exact to the pip for pound yen, but it should not be too far off. So just by looking at this formula, it is quite safe to have some conclusion. Example, if pound dollar is going up and dollar yen is going up, what do you think will happen to pound yen? Okay, if pound dollar is going up and dollar yen is going up, what do you think will happen to pound yen? Okay, most of you are saying going up, some of you are saying it will consolidate. The answer is it will go up. Because if you look at it from a mathematical point of view, if this value goes up, multiplied by another value that is going up, there's a good chance, not good chance, it means the pound yen will definitely go up. So similarly, if pound dollar is coming down and dollar yen is coming down, it is almost confirmed that pound yen will be dropping as well. So this is just by looking at this formula, when you enter any trade, let's say you enter position in all 3 pairs, for example, then you have to take note of the possibility and manage your risk accordingly. Example, if you look at the pound dollar, you enter a long trade. You look at dollar yen, you enter a long trade as well. And if you look at the pound yen, and you enter a long trade as well. If you do that, that means there's a chance that all three will move in the same direction and hit your target. Or if the pound dollar goes down, dollar yen goes down, it means your pound yen will go down as well, and there is a chance that all three will hit stop loss at the same time. So if you do that, then you have to manage your risk accordingly. Instead of dividing it by 2, chances is you may want to divide it by 3 instead. So to minimize the impact when the tsunami comes and one shot swipe across all 3 trades. Okay, so hopefully this is additional knowledge to help you manage your position if you do have such a similar situation in your trading. Okay, for pound dollar and pound yen, this week the big event will be on Thursday. From now until tomorrow, there may be some volatility, still may have some volatility in the pound sterling, but I personally do not expect the sterling to be moving much on Wednesday just before the election. So chances is market will be waiting as well for the election and then the result before they do anything. So if that is the case, I would prefer to go lower time frame. If we want to take any trade, take it within these 2 days, fast in, fast out, and then wait for the election results before deciding our next move. So that is my personal preference. So for pound dollar, you'll notice that on the hourly chart, it is forming a resistance over here. Very nice resistance. Okay, about 1.2910. They're about the area of resistance. The support is not so obvious. There's a lot of volatility occurring, so the support area of support is not so clear cut as compared to the resistance, but for reference I'll still mark it around 1.2865, thereabout. That will be the area. Okay, just give me a moment. 1.2865. Let me zoom in so that it is easier for you to see. Okay, so this would be the suggestion from now until Tuesday. It is forming a bearish engulfing. So if it does happen, possibly we could consider a quick short if the price close at 1.2899, just below the round number or lower. possibly could consider to go short, and of course the first target is just before it hit into the support region before 1.2865. That would be the first milestone. Or rather, if you choose, if it is close to the end of Tuesday or early Wednesday, then it hits the first milestone, then you can make the call to exit totally instead of partially. And the stop loss will be just above the resistance, plus a few more pips for the spread, etc. Oops, that is the red color for stop loss. Stop loss about 1.2925 thereabout. $2.925 or $2.926, $2.927 thereabout. So if it does happen, this is almost a 1:1.2 kind of risk reward. So that's a short-term pound dollar to be taken, if it happens, taken before the election. Next, we'll move on to the next pair of pound yen. Okay. Okay, for pound yen, the volatility also doesn't really look as orderly as the pound dollar. So the area whereby market is trying to make a decision is quite interesting, I would say. Okay, if price action is a bit tough for us to decide, then I'll opt for an objective way of looking at the market. When it comes to objective way, of course, this is just an example of how I do it. You may have the indicators that you are more familiar with, so or strategy that you use to trade, you are more familiar with it, then you can apply similar so-called concept with the indicators that you are using. So what I'm looking now is for pound yen, when there's a big event coming, unless there is a new poll result being released saying that there's high chance that Theresa May will win with a big margin. If that kind of poll result come out, of course the immediate reaction by the market is to buy sterling upwards. So if there's no such poll result being released, I personally would expect the market to have sell the sterling first before the news. So when there's uncertainty, there's a good chance that people will just sell first and wait for the news to be out. So if that happens, then I possibly will look for a quick entry, very short near term entry for a short as well. So if you have decided to take a short on sterling dollar and then now a short on sterling yen, manage your risks. There is a good chance that both position may hit stop loss or take profit at the same time. So if the candle close at just give me a moment. Close at 14256. Okay, I'm taking the shadow of these last three candles as a reference. So if the candle close at 142.56 or lower, that would fulfill my criteria for a short. Okay, the stop loss is very simple, a few pips higher than the last high to take care of spread. So stop loss will be around 14293 thereabout. Okay, the first milestone, or rather the target is a 1:1 risk reward before it hits into the support. Okay, this region is the decision region, which is quite big based on price action over here. Okay, this is the area. So 1:1 definitely is the price will hit into the area. So this is based on price action to go short. Alternatively, a more objective way is look at the indicator for stochastic at the region between 80 and 100 is a selling signal. So when stochastic go above the level 80, it is giving a selling signal. So the exact entry, once stochastic goes back below the 80 level, that would give me my entry signal. Okay, that would be a more objective way to trade using an indicator. So that's pound yen. So if pound dollar and pound yen both are going down, what would happen to dollar yen? Okay, let me repeat my question. If pound dollar and pound yen are both going down, what will happen to dollar yen? Okay, I'll type the formula out again for your reference. Okay, if pound dollar is going down, pound yen is going down, what happened to dollar yen? Okay, there's some answer who says will go down, some answer says will go up. Very interesting. And some say it can be any direction. The correct answer is, drum roll, it can be any direction, because it depends on the magnitude of how much the pound dollar and the pound yen drops. If, let's say, example, pound dollar drop 20 pips, but pound yen drop 200 pips, then in that kind of situation, there's a good chance that the dollar yen will be dropping as well. But if pound dollar drop 200 pips, whereas pound yen only drop 20 pips, then there may be a chance that the dollar yen could be consolidating, moving in sideways, or even going upwards. So in such scenario, we can't conclude just by looking at pound dollar and pound yen how would the dollar yen react. So it depends on how much or how big is the movement. So if we have short pound dollar and pound yen, and if we have taken a long on dollar yen, it could form what we call a hedging in terms of our trade. So if later we are looking at dollar yen now, if we see that there's a long opportunity on dollar yen, this is what happened. 2 short opportunity, 1 long opportunity. You'll notice that this could be in these 3 trades could form something like a bit of a hedging in a way. So when you have such hedging positions, the possible outcome is most likely a mixture. Some will hit stop loss, some will hit profit, kind of thing. So the chances of all hitting profit or all hitting stop loss will be lower. Okay. So anyway, let's go back to dollar yen. Oh wow, pound dollar is heading downwards. I'm putting the vertical line for reference. Okay, dollar yen is over here. So we see a big drop, dollar yen. Last Friday after non-farm payroll, disappointing. So big drop. The next move would be 10 days later. And we still, at this moment, expect Fed to increase interest rate. But the most important thing is the press conference and their forward plan. So it will depend on their tone. If they are more hawkish in their tone or giving high hopes for the 3rd rate hike in 2017, then possibly we could see the dollar yen rally back up towards the 111 or even 112 level. So for now, until the rate hike decision, it will be 10 days. So for this week, how would the dollar yen be impacted by UK election? Some of you may be wondering or have that question in mind. So dollar yen in a way may be affected because if there's a risk aversion, meaning because of all the uncertainty, and if the result of the UK election is not looking very promising, then it may benefit the safe haven of Japanese yen. And if that happens, pound yen could be heading lower along with dollar yen as well. Because if you compare US dollar and Japanese yen, the yen is still a safer safe haven relatively. So for now, we see the dollar yen is consolidating quite in a tight range over here, with less than 20 pips or so. This would be about 20 pips. Okay, let me put a price to it so that we can refer to it. Okay, 11060 and 11040, round numbers, easier. So price is consolidating. If you are a scalper, then you may employ any scalping strategy to scalp within this range, taking 5 to 8 pips. within 110.60 and 110.40. Then of course, if you are looking for breakout trades, then my suggestion would be over here. If the candle closes above 110.60, closes at 110.68 or higher, that would be my entry criteria for long. Of course, for short, I personally would not prefer to short at this moment, even though the market may be scaling back on the third rate hike expectation, but the fact remains the same. They are most likely going to increase interest rate in June, and it is, to me, it is quite unlikely the market keep on pricing or keep on pushing a dollar weakness, because the fact remains the same. Like I say, they are expected to increase interest rate in 10 days time. So I'll be a bit cautious in terms of selling the dollar within the next 10 days. So I personally would prefer to look for long opportunity. Okay, so that's my dollar yen take. Okay, next we'll look at gold. Yes, let's look at gold. Okay, gold is, let me quickly take the, okay, this is a 4-hourly chart, and this is the hourly chart. Okay, I personally prefer to trade higher time frame on gold because of the volatility. There's a tendency for shadows to be long on a low time frame, and usually these are the shadows that will hit my stop loss before it goes in my direction. So that is my personal preference to trade on a higher time frame for gold. But if I do decide my trade on lower time frame like H1 or lower, then a way for me to counter all this shadow would be set a wider stop loss. But if I set a wider stop loss, then it comes the next question is my risk reward may not be so favorable. So I have to balance all these different factors and decide whether I would go ahead with the trade or not. So hopefully whatever I shared earlier is to give you some insights to how I decide my trade. So back to gold. Gold benefit from US dollar weakness after non-farm payroll. And then now price is consolidating in the last almost more than 12 hours. More than 12 is 15-16 hours. Very tight consolidation, and then a whipsaw going upwards. You see the shadow. So anyone who has placed pending order above the tight consolidation most likely would get hit by this shadow. This is one reason why I don't like to put pending order when I'm trading breakouts. I prefer to wait for the candle to close, then I enter at the next candle. So this is the consolidation. For me, the gold entry signal would be 2 as well. I'm going to zoom in so that it's easier to see. The first one is if the candle close at 1279 or lower, that would be my entry to go short. And of course, if it close higher, that would be my entry to go long as well. $1282 or higher, that would fulfill my criteria for long. So that's my take for gold. Again, a straddle kind of opportunity. Okay, let me quickly one last currency pair before we end off tonight. There's a request on Aussie yen. Okay, let's look at Aussie yen. Okay, I'm quickly scanning through because the hourly candle would be ending soon in a couple of minutes. Okay. Okay, Aussie yen. Aussie has benefit recently in the last few hours from the so-called disagreement in Middle East. Very interestingly, I just read it 1 or 2 hours before the webinar. So the Aussie benefit from the dispute that is happening in Middle East between Saudi and some other Middle East country against Qatar. So apparently they are unhappy or suspect Qatar is supporting terrorist kind of activities and things like that. So of course, if you want to read more, definitely you can Google and read more about these geopolitical issues. But how has it got to do with Aussie? Because most of us know that Middle East, the main commodity is related to Middle East is oil. And last known oil prices doesn't affect Australia or Aussie dollar much in a way. What happens is because Qatar is a major producer of natural gas, and if it happens that there's some disagreement or some crisis in Middle East and affects the supply, then it could benefit Australia because Australia happened to be one of a major producer in natural gas as well. So that's what happens. We see the Australia rallying in the last few hours. So it doesn't mean that we know that RBA is having their interest rate announcement tomorrow morning. So some trader may suspect, oh, is the market expecting them to increase interest rate or expecting RBA to be more hawkish in their statement? So it is not that. So if you look at Aussie Kiwi, tomorrow afternoon, that would be the interest rate announcement. Personally, I feel that the RBA is most likely to be dovish because there's a sign of China slowing down. That definitely will have an impact to Australia. So I do not expect RBA to be hawkish or talk about tightening and things like that. So they would, I do expect them to express caution and be concerned with the slowing down of China and things like that. So in summary, it is most likely appearing to be dovish. So I personally would look for a shorting opportunity for this pair. And prices is consolidating in the last 5 hours. So if the price close below 82.60, okay, if it closes around too much. Okay, if it close at 82.57 or lower, that would fulfill my criteria to go short. Of course, if the dispute in Middle East is getting more serious, then possibly for the same reason, it could push the Aussie yen higher as well. So the other possibility would be a long opportunity if candle closes above 82.73 or higher. That would give me a potential trade to go long, but do exercise some discretion, because if after you enter a long trade and it doesn't go higher, it just hover there until the interest rate announcement. If it does happen, do manage your risk. If the trade is hovering, maybe I'm up 5 to 10 pips, or I'm down 5 to 10 pips or thereafter, and just before the interest rate announcement, I personally would close off the position, because I believe there's a good chance the RBA will be dovish, and that could be bad for a long Aussie Kiwi trade, long Aussie yen trade, because if Aussie weakens, Aussie yen will go down. So that's my take for Aussie yen. Okay, so pound dollar H1, as you can see, it fulfilled my criteria for a short. Candle closes below 1.2899. So it's at about 1.2896. That's the closing price. So it is my stop loss is about 30 pips, and potential about 28 pips. So it fulfilled my criteria for a short pound dollar over here. And whereas pound yen, you see that pound yen hardly moved. It is still so-called very tight range. So it is showing what this means: the dollar is strengthening, not so much of weakening in the sterling. So you see the dollar yen is heading upwards. So pound dollar going down, dollar yen going up, and not surprising to see pound yen heading sideways. Gold is still hovering in the range. Okay, so that's about it for this week. Time flies. So for next week, Jimmy will be taking you for a webinar, and I'll be back after that. So I'll see all of you again 2 weeks later, and I hope whatever I've shared in the last 1 hour or so would set you up nicely for a profitable week this week. So on behalf of Fullerton Markets, I thank you everyone for your kind attention. Good night and bye-bye.